it's Lien here with BK Forex. Today I'd like to share with you one of my favorite trading strategies. What I love about this strategy is that it's super simple and you can use it to day trade, position trade, or protect yourself from bad moves. The strategy is actually quite simple because trading doesn't need to be complicated. But if you're a sports fan, I think you'll love it. We call it running for the round number. I want you to imagine that you're watching an American football game. If the player catches the ball and runs from one side of the goal, which is say is 0, across the halfway mark to 50 and keeps running to the next goal, which is to say is 100, then the chance of reaching the other goal, which is 100, magnifies significantly. The idea is based on the concept that we as humans love to think in round numbers. I was watching the first episode of the last session of Secession last night, and the kids were bidding against their dad for a newspaper company, and they were haggling over the price. So the kids said, what's the point of nickel and diming at 8.5, 9.5 billion? Let's show them we're serious and go for 10 billion as the offer. The dad called them and said, congratulations on saying the biggest number in your head, with a few extra expletives, of course. My point is that as human beings, we love to think in terms of round numbers. 10 billion sounds a lot better than 9.5 billion. Not just because it's $500 million more, but because it's a big, fat, round number. The same is true for trading. Traders, investors, hedge funds, corporations love to place their orders, set their hedges, mark their stops at round numbers. Just think about it. Far more players, big or small, will be putting their euro-dollar stops at 110 instead of 110.17, even though the second price is probably the smarter price for stops. It is this very concept that we use to our advantage. For certain instruments like gold and specific currencies, if we're close enough to the round number, there's an 80% chance that market participants will make a move to test it. So if gold is headed to 2,000, and this is the first time it's been there in months, there's a very good chance that it will test it. It may not break or close above it, but it will probably test it. You can actually see that happening in this gold chart. Gold hasn't been at 2,000 for more than a year, and then finally it gets within $25 to $30 of it, and it was itching to test. And then boom, that's exactly what happened. Although it failed to hold that level and actually dropped back below it, the run for the round number was definitely tradable. You could have also taken a short-term trade targeting the round number. You could have avoided selling after the round number was broken and failed, or if you had a broader outlook, which at the time was off the heels of the banking crisis, and everyone's flocking to the safety of gold, you could have actually taken a positional trade targeting $2,000. 2,000 though is not the only important round number. This tactic works for less significant round numbers like 1,900 as well. Take a look at this chart. In this example, we had a round number break and continuation. And you can see that it worked out very, very well. The same is true for Eurodollar, for example. If it was close enough to 110 and it hadn't been there in a few weeks or months, there's a very good chance that price level will be tested as well. In this example, Eurodollar had not been at 110 for more than 10 months. We got within 25 pips of the round number and boom, it was tagged. This same dynamic happens with less significant numbers like 108, as you can see in this chart, and then again at 109, as you can see here. This strategy works very well for Eurodollar, Pound Dollar, and Dollar CAD. This chart shows all of the times the 135 level has been tested and broken temporarily or more significantly. You can see it happening in the left side of the chart here, 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 and on the right-hand side of the chart in this grouping over there as well. With these currencies, if round number is in the vicinity, like 25 pips, the chance of a run to the round number is very high. Now, this strategy does not work as well for pairs like dollar yen or dollar Swiss, so please keep that in mind when you're trading. There are a number of different ways to incorporate this strategy into your trading. For me, knowing that round number tests happen frequently in Eurodollar and Dollar CAD, if I see that's close and we are in the zip buy zone with the Eurodollar rising toward the round number, I'll be buying with an aim for a test of the round number. Here's what I'm talking about. Here's an example. Eurodollar was trading above the blue indicator